بسم الله والحمد لله والصلاة والسلام على رسول الله. اللهم علمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما. Hello everyone, this is Liquidity Club by Ahmed Shawi. Today is Sunday, the 8th of December 2024. I'll be doing the weekly market review. Starting with DXY, here we have the weekly time frame chart. As you can see, we started pretty much walking inside the busy by side and balance sell side inefficiency. We have formed a long premium wick right here. So I'm looking at the midpoint or the constant quadrant of the premium wick. If price wants to continue running down lower, be looking at this level here to pretty much hold price from moving above it. It can do the damage by the wicks, but I don't want to see any daily closure above this level. And we'll be targeting the constant quadrant of that discount wick here and this favorite gap, this the busy, the buy side and sell side inefficiency. You can see that I've already covered that last week review that we took out these two buy side liquidities. Going to the daily time frame chart, you can see the daily fair value gap here that is annotated by these two dark shaded colors lines. That the bodies are respecting the fair value gap. Wicks are just doing wicks are only doing the damage here. The, that would be considered like as a bearish breaker here. We broke down lower, retracement here into the favorite gap and the bearish breaker, and now we broke down lower. That enables this as a bearish order block. So bearish order block here, you can see the immediate rebalance here. So if price wants to break down lower, it gotta break down lower here. If it closes above this price level here, which means it closes above the above, it's like this price level is above the mean threshold or the midpoint of that bearish order block. So if it closes any daily closure above this level, means that it's going to run up higher, or we'll have a deeper retracement that I would like to see in the XY. So from here, we're looking at this level here, I'm looking at this favorite gap, looking at this small favorite gap, the sell side liquidity, pretty much the start of the sell program. I'm not saying that we are done with the buy program, but I'm saying that this could be the beginning of a sell program right there. It's just giving me the hallmarks of a sell program. So that's going to be pretty much it for DXY. Going to ES here, I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, ES is just pushing up higher. So we're in a buy program. I'm not trying to pose my force into. I want to see it top here. I'm not saying that it's going to top here. We are just going to we're just going with the flow that the market is in a buy program. So but we'll have some retracement to make the market efficient. It's always trying to The market is always going to be trying to make the market efficient. We have a volume balance here, the closing price of this candle and the opening price of this candle. I'm looking for price to retrace down lower to this volume balance. That's going to be my low hanging fruit or the partial of the next week. Above that, if above below that, if price wants to be animated to the downside, we're looking at the rejection block here, and we're looking at this sell side liquidity. Going to the daily time frame chart, you can see how we took out the buy side liquidity here. This is where like I think price is going to make the market efficient by retracing into this volume balance. From for here, the daily time frame is going to be like from this closing price to this opening price, right there. This all of it's going to be the volume balance. We're fading this candle here, but because of its this volume balance annotation is from the weekly time frame chart right there. The daily it's refined to the closing of this candle and the opening of this candle right there. So this is what I'm really looking at next week, a retracement here into the internal range liquidity, this volume balance. So you can see external has been fulfilled here. Next would be internal range liquidity, which is going to be on the form of that volume balance. As I mentioned, if it's going to be animated to the downside, we're looking at the rejection block here, and we're looking at this sell side liquidity. So that's going to be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, the same thing is mentioned for NQ. We took out the buy side liquidity and we have the small volume balance here that I'm looking for price to retrace to. Going to the daily time frame chart, we also have some favorite gap here. Price might retrace into that favorite gap and this volume balance right here. Like it's more refined here to this small volume balance here. Below that we have this sell side liquidity. So pretty much I'm looking for lower prices next week. So that's going to be pretty much it for NQ. Going to Euro USD, also known as the fiber, here I'm viewing the weekly time frame chart. You can see how, as I mentioned last week, Price is going to trade back into the SIBI, sell side imbalance, buy side inefficiency. This candle is low, this candle is high. This area encapsulates the SIBI, the fair value gap. So price did trade up higher to that SIBI. Now we formed a long discount wick here that I'm looking at the midpoint or the compartment of that discount wick. If price wants to keep pushing up higher into, let's say, the high of this or the compartment or the high of that SIBI, or if it wants to be animated to the upside, reach to this SIBI, I would want to see support at this price level, which is the midpoint or the compartment of that discount wick. It can wick through it on a daily basis just to do the damage, but I don't want to see price close below it. So you can see our price traded into the monthly fair value gap and then reacted of that monthly fair value gap and took out this side liquidity. Going to the daily time frame chart, you can see we took out these equal highs. We pretty much have like a bullish order block here in this midpoint of the consequence of that discount wick. So if price closes below that level, it's going to be pretty much says that like it's going to run for the sell side liquidity and it might have deeper retracement. It might just take this sell side liquidity. Otherwise, we have an immediate rebalance here. So price might just run up higher here. So that's going to be pretty much it for EURUSD. And if it wants to be animated above this price level, we have this small fair value gap here, the daily fair value gap, SIBI. Above that, we have this buy side liquidity. So that's going to be pretty much it for EURUSD, or also known as the fiber. Going to pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. You can see pound is just pushing up higher. You can see it's almost reached to the high of this fair value gap or this candle's low. Above this price level, we have this candle's high. We have the consequence, the premium, the this premium wick, the consequence of that premium wick or the midpoint as means of the target. But if price wants to continue, we want to see some support at the midpoint or the consequence of that discount wick right there. So going to the daily time frame chart, you can see how we formed a low here, high, lower low here to go taking out the sell side liquidity and then running up higher here. This would be considered as a bullish breaker. And there's a fair value gap here, price retrace into the fair value gap. As you can see, price filled that fair value gap here. And then 2 days later, it just traded to the constant quotient of that fair value gap or the BSI, buy side imbalance, sell side inefficiency. And then it has traded up higher, forming and creating it, like validating this bullish order block. So you can see that the midpoint of that bullish order block is the same as the midpoint or the constant of that discount wick. So the constant this is just like tip for you as a gem in this weekly review. If you've stayed until this far, the constant of discount wicks or the midpoint of the discount wicks is bullish order blocks, and vice versa. It's like the mean threshold of the bullish order block, and vice versa for premium wicks. The midpoint of the premium wick or the consequence of that premium wick is the midpoint or the mean threshold or the midpoint of a bearish order block. So you're welcome. You can go over your charts and you can validate what I've just mentioned. Anyway, so if price wants to run up higher, we have this fair value gap here, we have this small fair value gap here, and if price wants to element to the upside, we have this buy side liquidity here, the relative equal highs here. Above that, we can look at this fair value gap here. So that is going to be pretty much it for this week review. Don't forget to check out the last video where I was talking about the trade review that I took on Friday, the 6th of December 2024. That is going to be pretty much it for this week review. I really hope you found this one insightful. Until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.